money laundering involves three different stages, and the first stage is placement. Now, usually criminals get their money in cash, and the biggest headache they have is how do they ensure that they can place this cash money into circulation. So what they will do is that they find various ways to ensure that when they're depositing money into banks, it does not come off as suspicious. So they can open up shops, restaurants, bars, car yards, and even other legitimate businesses that could be both locally and internationally. So an example here is that someone can open up a restaurant and maybe on a good day they make 100,000, but what they do is that they go back to their cash money, which they got through corruption, and they mix it with 100,000, and maybe as they're depositing money in the bank, they will go and report and say they made 1 million on a certain Friday. That way, they have gotten part of the dirty money mixed with what they genuinely earned, and eventually that money ends up into the banking system. So that is what we call placement. Now money is starting to circulate. And of course, the other way of a placement is that you can also find criminals moving money across borders. Someone can have a briefcase of so much money, traveling across borders with this money, finding ways to end up depositing money into different financial institutions. We can also have a scenario where someone takes a loan, but indeed they're just trying to create a paper trail so that when they're asked, where did you get this money from? They will say, look, I took a loan and this is how I've been building my wealth. But ideally, what they're trying to do here is that when it comes to the repayment of these loans, they will just go back again to their cash money and use the dirty money to repay back these loans. By getting the loan from the bank, they're just trying to create a paper trail of legitimacy. So that is one of the key things that you need to understand when it comes to the first stage of money laundering. The second stage of money laundering is called layering. Here, criminals are trying to disguise an audit trail. So what they're trying to do, they're trying to distance themselves from the source of that illegally obtained money. So what they will do is that they will transfer funds from one account to another. They will open up front companies. These are companies that start to operate, but you may not even know who the beneficial owners of the companies are. I'm sure you have seen certain companies, but when we ask who is the owner of that company, you may never know who owns the company. The idea here is that someone is trying to ensure that if you were to go and look into their history, you can't really tell that their money came from corruption. They can open up several businesses. They can end up investing dirty money into buying bonds, They can do money transfers. They can even use the cash they have in their houses to go to their forex bureau, do a lot of exchanges. That is what is called layering. Someone is trying to disguise the audit trail of the source of their illegally obtained money. So the whole idea here of layering as a stage of money laundering is a criminal is trying to distance themselves from where they actually got that illegal money through various transactions, buying off certain bonds, investing in companies that operate without actually knowing who the exact owner of that company is. Now, the final stage of money laundering is what we call integration. At this stage, what the criminal is trying to do is that now they're trying to get back money they have gotten. Either they have been running a front company, and now they're reintegrating the profits of that company into the economy so that everything appears normal, so that someone can actually look at an individual's profile and think that this is a businessman who has been performing personal transactions. During also the integration stage, you will see these individuals buying real estate, buying luxury assets, and of course, opening up businesses. The idea here is that the person, number one, we started with placing money into the financial system, layering so that money does not look to be tied to a specific individual, so that the origin of that source of money cannot really be traced because of different transactions and how money has exchanged hands. Now, that same amount of money is being reintegrated later on into the economy so that now everything appears to be normal. Everything appears to be normal business. Someone is investing in office spaces, real estate, and that way they have reintegrated their illegally obtained money so that even if you are to now to do a background check, you're going to find what appears to be legitimate source of income. These are the 3 stages of money laundering, and remember, for there to be money laundering, it's not a must that all these stages must happen. Maybe 1 stage could happen, it could be placement, maybe 2 stages could happen. So it doesn't matter that all the stages have to be fulfilled for there to be money laundering.